Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Will Fraser-Allen of Albion Capital to talk about the Albion VCTs. So, Will, welcome. Firstly, could you give us a bit of background to Albion Capital?
Jonathan, sure, and it's great to be here talking about Albion and our VCT offers that we've just launched. So a little bit of background about Albion. We are a long-established VCT manager. We have approximately 545 million of VCT assets. We were one of the first VCT managers to come into existence when the VCT scheme did back in 1995, and we've been running VCTs ever since. So we've got deep experience of that. We currently run 6 VCTs, and what we're looking to do is to provide exposure for investors to unquoted, high growth, and frankly very exciting businesses. And we do that across a diversified portfolio of about 70 companies. One of the core features of our investment, of our VCT investment in the Albion VCTs, is that we look to deliver a regular income stream of around 5% of NAV.
And your background?
So I've been in venture capital at Albion, investing in young companies really for in excess of 20 years. And I've been very privileged to be part of the team that have grown the Albion business, that have developed the investment focus that we're going to be talking about. So my background is deep in growing young, unquoted companies through the provision of venture capital.
So it's a range of 6 VCTs, is that correct?
Absolutely. So we have 6 VCTs, and we are raising money for all 6 in the form of a top-up offer. And indeed, many, and pretty well all our investors invest across the 6, because that gives them exposure to the broad portfolio of about 70 companies.
And are there any key differences between the 6 VCTs to watch out for?
I suppose the key is that they all have the same investment focus, which is in growth and in innovative companies. But I will just highlight one particular VCT of the 6, which is a little bit different, and that is Albion Venture Capital Trust. And the difference is that historically, under its previous investment strategy, focused on asset-based investments. Those, since about 2017, we've changed the strategy, and it's in a transition to look more like the rest. So over time, it'll look increasingly like the other 5.
Mm-hmm. So what companies are you looking to invest in?
So our core focus at the moment is in two main areas, and that's really software and healthcare, and where those two overlap. So effectively it's B2B software, so where there's a high level of recurring income and providing mission critical software to the enterprises that they serve. And then healthcare has been a very core theme of ours for many years. And we look both at healthcare companies more generally, but also in what we call digital health, which is effectively software making healthcare more efficient.
And is there anything you avoid when looking at companies?
We tend to stay clear of business to consumer. Our exposure is very limited, and that's really a question of focus. We've taken a view that we want to have deep knowledge in the particular subsectors that we invest in, and B2C tend to be more cyclical, more around brand, and just an area that we feel is more volatile. And plays less to the strengths of the team and indeed our interests.
Mm-hmm. And so management teams, then what are you looking for in a good management team?
There's a list of things you're looking for, but I'm going to pick initially what I think is the most important, and that's resilience. And there's a lot has been said about resilience in recent years, and the pandemic that we're going through has really tested the resilience of all of us. But it's more than just reacting to something as extreme as a COVID pandemic. It's the resilience to just manage the ups and downs of growing a business. It isn't a straight road. There will be turns in the road, and a resilient management team is one that's able to react and change the course of direction and prosper as you have those changes in the road. So resilience hugely important. We definitely want a team that understands about engaging with all their stakeholders. Mm-hmm. So that's their employees, that's their suppliers, that's their customers. But it's also how they engage with their investor base, because increasingly we're invested in technology businesses where you have a broad investor base, and it's very important that the management teams are comfortable with that broader engagement, and they do it in an authentic way, behind a very clear vision of where their business is going, because ultimately vision is hugely important if you're going to grow what we are looking for, which is a category leading business in the sector that they're in.
So could you give us some recent examples of investments you've made in the portfolio?
Yeah, so if you look at how we're investing now, it's really in two areas. It's seeding the portfolio with new investments, but increasingly where our investment activity is in supporting our existing portfolio. So the broad principle is that you find a business, invest in it early, and then you back the successful businesses over multiple rounds of funding, and therefore create significant value over time. So the idea is that you're very much backing your winners as they scale up and grow. So if I give you a few examples of some earlier stage investments that are sort of the future stars, if you like, I'd mention Gravity, which is a business that helps enterprises manage APIs. APIs is the sort of connectivity between software and data. So, in this increasingly data-rich world, managing those interactions with lots of other sources of data and other bits of software is fundamental. And Gravity provide the next generation of API management. So that's a good example of a B2B enterprise software business. If I think about healthcare on more the digital health side, I'd mention Nuvo Air, and that's all around helping clinicians treat respiratory disease within a patient community, and they do that through connecting a spirometer, an oxygen sensor with effectively your smartphone, and it allows for remote monitoring of their conditions. So cystic fibrosis, the Royal Brompton is a big customer, for example, but also moving into a very big market which is asthma, and a key bit of that sort of managing these very difficult conditions.
So two good recent examples there. What about some of the more established holdings within the portfolio? How are they performing? Are there any particular highlights?
Yeah, it's very, when looking at the Albion VCs, it's really important to understand what is in the portfolio, because it's back to this point that we're seeking to deliver top quartile returns, and you do that in venture by very much backing the winners, the outliers, the ones that do very well. So if we narrow that down to the sort of three largest companies within our portfolio, which are now, as the last valuation, which was September, had a combined valuation of about 126 million within a 545 million portfolio. So these are substantial growing businesses, and the top three are Quantexa, which effectively uses AI and data analytics to mostly to help particularly large banks detect financial crime. So finding patterns in data, now being used by some of the largest banks in the land. HSBC would be an example. It's grown very, very significantly, and indeed has just raised $153 million from Warburg Pincus, the very well-known global private equity investor. That's growing very rapidly, and really, really exciting businesses. The second is Egress. So Egress again has had investment from the US now. And that's all around data encryption and encrypted email. So this is how do you, in this very difficult world of digital world where you have lots of hostile attacks, how do you manage your sensitive data? And they've built up a very effective platform to protect your emails and other data, and they do that for the NHS, for lots of local authorities, the Cabinet Office, as well as lots of corporate examples too. And then the third of the top three, if you like, is Provica. Again, this is a healthcare investment. So their core mission is to make drugs available to paediatric and children's market in a safer way. So they take existing drugs used on adults, and then they license them, reformulate them so that they're appropriate to be used in the paediatric and the children's space. So their first drug, Cyalenor, is now selling right across Europe, and really excitingly behind that they have a pipeline of other drugs that are going through that licensing process.
And so do you find when you have successes like Quantex or Provica in the portfolio that then in turn feeds into deal flow and you'll start seeing more of these similar types of deals? Well,
absolutely. If you're an entrepreneur, you're looking at your various options as who the partners are you want to work with, and a very easy way to take a view on a venture capital house is to look at their past successes, and if those past successes are in near or in your sector, that's clearly going to give you a clear reason to come and have a discussion, and it gives us sector knowledge and deep insight into what they do, so that we can help them in their mission to build category-leading global businesses.
That's a very good point. And so the pandemic, then, how's that affected your portfolio?
It's been an interesting 2 years, and that's I know that will be felt by everybody watching this video. What I would say is, if you look at what our core focus is, which is effectively healthcare and software, those are two sectors that have fairly universally weathered the COVID storm well. So we were well positioned in terms of having a number of telehealthcare businesses, and we were well positioned in having businesses like Egress, which clearly was able to massively help remote working. So our sort of core focus and sort of core portfolio did very well. We did have some companies outside that core focus, so more sort of investments we made under our previous sort of focus. So, for example, we had a hotel at Stansted Airport that had a very tough time for all the reasons that you would expect. But the good thing in summary, we weathered it well, and in fact the return for the last 12 months across the 6 portfolios is just over 19%. So that gives you a sense of the growth that we've been able to continue to have despite what has been a tricky time.
So your investments in software and technology essentially outweighed the impact on some of those asset-backed investments.
Absolutely, the weight of our returns has been delivered by software and healthcare.
So we touched on it earlier, but besides funding, what do you do practically to help some of these companies succeed?
So our job as an investor is clearly to provide capital, and that's capital to grow. But it's a much broader job than that. It's how can we help companies scale very rapidly to become those category leading businesses that we want to be invested in, and we do that in terms of support through board engagement. But we do a lot beyond that. So let me give you an example of the sorts of skill sets that we are building up inside Albion to help these companies. Jane Reddin has joined us specifically as talent director. So she works with companies on helping our businesses create the very strongest management teams. So we do that in terms of how we assess the teams when we invest, but post-investment she's working with them in terms of helping them become market-leading hirers of top executives. So helping them, we call it hiring coaching, but going beyond that, looking at their organisational design and looking to help them identify the type of individuals and roles that they'll need if they are going to be category leaders.
She's got a very good CV, Jane, hasn't she?
Yes, indeed. Yeah, no. So she's been deep in talent for many years. Most recently with Balderton EQT, but in a broader headhunting role before that. We're extremely lucky to have her on her team, and she does have a core focus now to build out that portfolio platform to help our investee companies.
We spoke earlier about some of the successes within the portfolio. Of course, investing at such an early stage is quite risky. How many companies do you expect to fail in the portfolio? How would you quantify the risk for investors?
The risk is not of a few companies failing. The risk is that the top 15 aren't good enough. That's a real risk. So I would sort of steer the sort of question away from have a few failed. Yes they have, and I'd look more at, well, actually, have you got the real quality in the top 15 that are going to deliver those returns, and then more specifically the top 3 that we've talked about. So the actual number of failures, because we invest early and relatively small amounts initially, shouldn't have a significant impact on performance. Far more important is that those top 15 really perform, and I'm very proud of our portfolio at the moment.
I guess it's almost like a risk-weighted approach, in that the early new positions, when the risk is very high, they're very small positions, and as they grow, you can inject more capital.
Yeah, so it's all about that follow-on investing, being able to back them over successive funding rounds and build up a stake in the really good businesses like Quantexa, Egress, Provigo.
And so, what about exits? Have you had any exits recently in the portfolio?
Yeah, so exits are important in a VCT. We're delivering an underlying 5% yield on NAV. So we need to have a steady stream of exits, and that's real evidence of a healthy portfolio, that in any given year you've got exits to do that. So if you look at the last 2 years, we've roughly had exit proceeds of about 90 million. And that's through investing, through selling a number of businesses. Part of that has been the shift out of some of the asset base. So we sold our care homes, which was a substantial exit, and that did give rise to a number of special dividends in those VCTs that held the care homes.
And so, what about the performance of the VCT as a whole? How's that performing?
So it's performing well. I mentioned our 1 year. The last year has been very strong, but actually looking longer term is more important. So if you look at five-year return, it's been just over 10% per year. If you look at a 5-year return, if you look at a 10-year return, it's just over 8%. So what we're looking at there is we've got a target of 5%. We need to be comfortable that is covered and exceeded, so that we can grow capital as well as paying out income. So I'm pleased with the performance. It's a decent long-term return. It's obviously the dividends we pay are typically tax-free for our investors, so it's been a good proposition for them.
So you mentioned dividends then. The Albion VCTs have got quite a unique feature with their dividend targets. Could you tell us more about that?
Sure. So the target, as I've alluded to earlier, is that we look to pay around 5% a year, and we calculated it at each half yearly as 2.5% of the prevailing NAV. So that's how we set the level of the dividend. So it's variable. So what that's doing is allowing investors to benefit from increases in the portfolio more immediately. But beyond that, we have 6 VCTs, all paying dividends, and they each pay 2 a year. And we've timed those dividends so that there is at least one dividend payment in every month. So for those investors that are looking for monthly income, by investing across the 6, they can get a monthly tax-free payout. And we have a further feature that you can choose, if you're looking for more growth than income, you can reinvest your dividends, which effectively allows your investment to have compound growth, and has the benefit of additional tax relief, because those dividends reinvested are treated as new investments.
Of course, all 6 VCTs this year are raising capital, so you can actually invest across all 6.
Exactly. We've gone out for 80 million with a potential further 20 million of over allotment. All 6 are raising. They are raising different amounts. So if you are particularly keen to invest in all 6, then you should invest earlier on rather than later.
And it's one of the largest VCT raises of the year. Are you confident that you can deploy 100 million?
Yeah, well, we are very clear at Albion as to how we establish how much we raise, and we look very carefully at the cash requirements of the VCTs. So we look at the new investment rate. Importantly, we look at the very substantial follow-on requirements of the portfolio, and that's back to this backing those really good companies. So in setting that target of 80, possibly 100, we are looking at the potential follow-ons, which are substantial within the portfolio, to build and back those winners. We're looking at a steady stream of interesting companies that we're investing to seed the future outliers. And then we're also looking at the requirements of the fund more broadly, particularly around dividends, around buybacks. So the 100 million is being raised, or 80, potentially 100 million, is being raised with those various factors taken into account, and with confidence that it's the right number to raise.
So Will, to sum up, I want to invest into a VCT this year. Why should I consider the Albion VCTs?
We're a well-resourced, experienced management team. We have deep knowledge, and we invest behind long-term themes. The team are doing a great job. Our performance has been strong. I think there's a real opportunity in the sectors that we are currently focusing in at. And I think most importantly, by investing in Albion VCTs, you're getting exposure through a top-up to some really interesting companies like Quantector, Egress, Pravica, which in a way that would be very difficult to find other than coming through the VCTs. So I'm excited about the years to come. I'm very pleased with where the Albion team is, where the Albion capability is, and I'm very proud of the entrepreneurs that we're backing and the fantastic businesses that they're growing. They will be category leaders and are category leaders.
Will Fraser-Allen of Albion Capital, thank you very much.
Thank you, Jonathan.